Hello everybody and welcome to part 1 of Wyckoff. In today's section we're going to be going over exactly what Wyckoff is and how you can, begin to start understanding the concept of Wyckoff, right? So let's begin. What is Wyckoff? Wyckoff is a schematic used by smart money in order to distribute a large order across an area into smaller orders where the liquidity can be provided, right? And Wyckoff can be seen on all time frames, right? So it's not limited to the higher time frame, not limited to the lower time frame. It can be seen on all time frames, right? And Wyckoff will usually end with a POI or slash an order block that you can enter from. And there are two main schematics: the distribution schematic, also known as the sell schematic or the bearish schematic, and the accumulation schematic, otherwise known as the buy schematic or the bullish schematic, right? Because the distribution usually ends in you taking a sell position or a short position, and the accumulation usually ends up with, a bullish market with a buy position or a long position, right? And by the way, just small side note, whenever I say POI, that basically means order block or a point of interest, right? So let's begin now. First of all, I'm going to start off with this diagram that I've made in order to describe exactly what's going on with Wyckoff. So, as I've drawn it out in red, I'm going to, go over it with I've drawn it out in black, so I'm going to go over it with red. So let's begin. The first point of the Wyckoff schematic, right, for the sell schematic. So I'm just going to point this out here. This is the sell schematic. Right, so this is the distribution. I'll just write that for short, distro. Wyckoff. Right, so this is the sell schematic or the distribution Wyckoff, right? And that is called that because we usually are gonna sell at the end of the the schematic, right? And so the way the schematic starts is by the preliminary supply, right? The preliminary supply is just a small mark up, right? Just this small move to the upside, usually in the shape of like a channel or rally, which usually is then followed by the buying climax, right? The buying climax is the highest point of buying before we move into, our significant amount of selling, which is the automatic rally. Now, the automatic rally is just a point at which price will show a sharp, quick move down to the downside, nothing too major, but it will usually break structure where the preliminary supply was, right? So wherever this was, right, the low that it left, the automatic rally will usually break that low, right? It doesn't always have to, but it's good if it does, right? And then we have the secondary test. Now, the secondary test usually I would like it to meet up with the buying climax. Why? Because this usually tells me that right now liquidity is being created so that smart money can eventually open a position, right? Because what the point of Wyckoff is, as I mentioned in the PowerPoint, is that we have, let's say smart money has 100 million dollars that they want to distribute throughout, that they want to break up into small chunks, right, and eventually sell off a market, right? Now they cannot just, as we have seen in the order block and the liquidity section, they cannot just open a 100 million sell like any ordinary person, right? They cannot just open a 100 million sell. They cannot do that. So what they have to do is find the liquidity, right? So they have to create and find liquidity in which they can open smaller cells and distribute it over schematic. Hence why it's called Wyckoff distribution, right? And the same thing goes for Wyckoff accumulation. They have to accumulate buys in certain areas. For example, 20 million, 20 million, 20 million. So we've got 60, and then a 40 million, for example, right? Or they will sell, right, in small chunks. 20 million sell, a 20 million sell, a 20 million sell, and then overall 40 million sell, right? And that's exactly what's going on here. I'm going to show you that step by step. So right now they've created liquidity. Why? So that they can open a position, right? And if we use the same logic here, right, there was liquidity created here in the form of resistance, right? And then eventually over here, we had a position distributed, right? So what we can assume is that, for example, in this example, we have 100 million, right? So we can say 20 million has been sold here. And then 20 million again has been sold here, right? So out of the 100 million, we've right now we've sold, so I'll write as we go along, right? So we've got 20 million, 20 million, so we've sold 40 million so far, right? Now we have to sell off the rest, right? So this was our buying climax, our secondary test, right? So ST, our secondary test, right, following our automatic rally, and this will usually create liquidity in the form of resistance, so that smart money can grab this liquidity and form our UT, our up thrust, right? And this is another area where we will see a rapid area of selling, right? And this can be another area where smart money distributes a sell, right? So we can see a 20 million sell. So we've got 20 million, 20 million, and now we move into our UTAD, right? And yet again, we see smart money is accumulating or creating liquidity, right, in order to grab that liquidity and open another position. So now we can assume over here we've got another 20 million sell, right? So now we've distributed overall, smart money has 60 million, right? So now they're distributed 60 million, right? Right? And now we've got 40 million left to distribute. So what do we have here? After the creation of the UTAD, so the up thrust after distribution, we have the creation of a POI or a sell OB, right? Right, a sell OB, right? So sell OB, order block, sell order block, right? And then we will see the so we will get the mitigation of this through the last point of supply, right? And this is where smart money will, sell off everything that they've got, right? 40 million left, and and then we'll see a massive reaction and this is where we'll get our entry from, right? So this is what I'll mark out, right? And yeah, that's all there is for Wyckoff distribution. So this is applied the exact same thing for Wyckoff accumulation, except there's a bit more changes in the name of the certain points of the schematic, but the theory is exactly the same. They are taking a very large amount of money, and they are using these specific schematics in order to distribute or accumulate smaller chunks of this, right? So we can split this up into 20 million, 20 million, 20 million, and then we have the 40 million left over, right? What they've done is they've distributed, in this example, they've distributed all of these, this 100 million, into smaller chunks of 20 million and then a 40 million, right? Or they can accumulate, right? They can accumulate, therefore buying, right? And I'm going to show you that right now. So if we move on to this pre-made example, right? Because it's exactly the same thing, so I'm just going to use a pre-made example, right? And I'm going to go over this really quickly because the theory is exactly the same. It's just that the way price is moving is just a little bit different, right? So if we start over here, same thing again, our PS or PSY or whatever you want to call it, right? Which is just, like I said, just a small amount of buying before we move into our, prolonged move down, right? So I'll move to the downside, right? And then, now this part is a little bit different. We've got our seller's climax, okay? And so, or our selling climax, right? And it's basically the same thing as our buying climax, except it's to the sell side, right? Because eventually, like I said, we'll go to the upside with accumulation, right? So we have our preliminary support or preliminary supply, whatever you want to call it, right? And then we have our selling climax, right? And then we have our automatic rally, same thing, right? Sometimes it might break structure to the upside. It usually might not. That's just something that you need to look out for yourself, right? So we have our selling climax, our automatic rally. Then we have yet again our secondary test. Now this diagram doesn't show it, but I'll usually like to see price accumulating liquidity again, right? So that yet again smart money can grab this liquidity. And this could be your spring, right? They've just mentioned this as a secondary test again. However, I would call this our spring, right? So we'll just move this across here. So this would be our spring, right? And then following that, we'd have our test, right? And that's where we would enter from, right? So we could enter from there, right? So ignoring all of this, right? And then let's just say we have our seller's climax, right? And we have the secondary test, and we've got the accumulation of liquidity, right? Now, we can just say that our spring area is the UT, right? It could be equivalent to our UT, right? And then we don't always see a test. We can see a test. However, yeah, again, we have our last point of support or last point of supply, whatever you want to call it. And that is where we will enter from, right? Usually from a POI. So let's just say we've got this. We'll just enter from a small buy order block, right? And there you go. That's all there is to Wyckoff accumulation and distribution. And let's just move on to a real life example, right? Where we've actually seen this schematic play out. So we'll begin by marking out So what do we have here? Our preliminary supply, again, like I said, in the form of a a rally or a channel upwards, right? And then we have our buying climax, right? And then it's followed by the automatic rally, right? And we saw a break of structure to the downside, like I mentioned before when we were going over it, right? We have that, where is it? That break of structure to the downside, BOS, right? And then if we move on to our secondary test, right? I've placed it in two areas just because, you can do that because it's meeting up with liquidity here. And then we have meeting up with liquidity here, right? Now we've got that creation of liquidity, which is extremely important because why? Now smart money can distribute a position, right? They've already distributed the position here because they've broken out this trendline liquidity. So that's, let's just say 20 million here, right? And then we're going to have 20 million there. Then we're going to see the creation of more liquidity, right? And then we're going to have our UTAD, we can say another 20 million, for example. And you can see the rapid, selling followed by a multiple break structure. Oh yeah, that's something I forgot to mention. At our UTAD, we always want to see a break of structure to the downside, right? Breaking multiple structures to the downside. Why? Because this validifies our POI over here, right? And if I just show you that on this, right, so we'll have this, and we have the break of structures, right? We've got those, and you can mark this out as your sign of weakness, right? That shows that price has broken structure to the downside. So this validifies, this validates, I should correctly say, this POI over here, right? This sell order block, right? As I'm going to go into in further detail, right? So we've got that, and yeah, and then we're going to have our last point of supply, which I'm about to show in a minute. So let's just go on to a smaller time frame so we can see this POI in more depth, right? So you have to make sure that your POI is still valid, right? It's following all of the order block rules. So is it mitigated? No, it's not. High volume, break of structure, with the trend, you don't need to worry about that because after we are in a Wyckoff distribution, so we know it's going to be selling off eventually, and then we can just enter the normal way, right? And then you can have your targets as usual, right? Following our risk control section of the course, and that's all there is to Wyckoff, right? So the way you enter from Wyckoff, right? If I just show you this in the diagram, is through this POI created at the UTAD. So after the UTAD, you wanna see two things. After the UTAD, you wanna see. So I'll just section off a little area over here. At the UTAD, you want to see two things, right? Number one, break of structure, right? And number two, a POI, right? And this will be, in this example, a sell order block or just any form of order block, right? Because in an accumulation, we will see a buy order block over here, right? And so if I just show you that over here, right? Here we have our break of structure. We're moving back onto the tool. Here we have our break structure, and here, as I just showed you guys, we have our POI, right? And if you're wondering which POI do I select, it goes the same thing for the order block rules. Which order block do you select, right? The most valid order block is the one that you select, right? And as you can see here, this is clearly the most valid one. And yeah guys, that's all there is to Wyckoff that I'd say for now. In the next episode, we're going to be going over the Wyckoff price cycle, and I'll just touch up a bit more on entries, right? I'll see you guys in the next part on Wyckoff.